Good afternoon from Oanda. I'm Jeff Halley. Last week we talked about stock markets and how some notable indices had started breaking to the downside. I'll let you refer to last week's video rather than repeating myself. Needless to say, that pattern is continuing, and we're seeing both the NZDUSD, the S&P 500, and also some major Asian indices, CSI 300, Shanghai Composite, KOSPI, Nikkei, all looking very much like they're moving solidly into downside correction territory. What will actually make this happen? More than likely it will be the return of the bond temper tantrum story where US yields rise again. Although I will say this week that has calmed down somewhat in a very slow data and news week, to be honest. Interestingly though, the US dollar has been strengthening this week despite US yields moving lower, and I think it deserves some attention. We'll keep it simple today, and I'm going to stick with some of the majors. If we look at the euro dollar, for example, now we're seeing European markets under pressure because of the return of COVID-19, also their vaccine spat over AstraZeneca vaccines with the UK. But we have seen here that the euro dollar has broken out through support at 121. Now, I believe that there's quite a substantial amount of downside room here over the coming week or 2 weeks, and it could be targeting 116 if US dollar strength continues to gain momentum. Similarly, we can see from sterling that it has finally broken out of the bottom of quite a multi-month upward channel. The breakout, it was at 138, and it fell quite hard yesterday. It is very much suffering at the moment because of this AstraZeneca fight. If the EU blocks these vaccine exports to the UK, it could slow down its otherwise very successful vaccination campaign, which could delay the economic recovery of the UK. Anyway, that breakout does signal that sterling can potentially target 134 in the sessions ahead. If we look at the commodity currencies, your Australian, New Zealand, Canadian dollars, they are also showing some quite dangerous downward signs as well. They have a very, very high beta, not just to the global economic recovery, but also they're highly sensitive to US yields and US dollar strength. And across all three, we can see some interesting setups here. Australian dollar has broken out of quite a long-term support line, this rising wedge. It broke out at 78.50, and now we'll be targeting, it's targeting now at the moment 0.76, 76, and it could potentially move down to 74 and on to 72 in the sessions ahead. If we look at New Zealand dollars, that suffered quite dramatically as the government yesterday announced national measures to control the rampaging property market there, which has effectively put any rate hikes that have been priced into the markets by the RBNZ on hold. It has broken out through 73 and is now testing critical support at 71. And a daily close below this does signal more losses to 0.68. Dollar Canada has actually been underperforming recently. The Canadian dollar has been strong, mostly due to high commodity prices, but the fall in oil has seen dollar Canada start to rise again, and it is testing a very long-term resistance line at 126. And a weekly close above here, I believe this week, does signal more gains by the US dollar against the Canadian dollar, and it could see a rally to 129. So what's going to cause more US dollar strength? Well, we're starting to hear the first snippets now of the follow-on $3 trillion US infrastructure package. It was hinted at by Janet Yellen overnight. And if we get some more concrete details on that next week, I'm fairly sure that we're going to see US bonds move higher again. That should be enough to trigger yet another bout of US dollar strength. Thanks for watching and have a great week ahead.